had a chance to see Redfin Wholesale's That Broker Show, giving you great ideas and tips that brokers can use to go ahead and increase their business, you should really check it out. To see it, all you have to do to see Redfin's That Broker Show is click this banner right over there. So the Federal Housing Finance Agency, the FHFA, and the U.S. Department of the Treasury, also known as the Treasury, suspended certain provisions added to the Preferred Stock Purchase Agreement, also known as the PSPA, and that's with Fannie Mae and Freddie Mac. Now here's how it goes. According to acting FHFA Director Sandra L. Thompson, this suspension will provide FHFA time to review the extent to which these requirements are redundant and inconsistent with existing FHFA standards, policies, and directives that mandate sustainable lending standards. So here's how that goes. The FHFA will consult with the Treasury on the scope of the review and on any recommended revisions to the PSPA requirements. The suspended provisions, now guys, understand, this is the meat on the bone right here. The provisions include limits on the enterprise's cash out window, that's loans acquired for cash consideration, multifamily lending, loans with high risk characteristics, and second homes and investment properties. So these programs and loan profiles are and have already been reconsidered for revision. So with the changes to the PSPA, we can expect to see more revisions and changes to mortgages on second homes, multifamily, high LTV, low credit score, meaning high risk characteristic loans. These type of programs are going to become more difficult for a mortgage company to secure going forward. So understand, the FHFA and the GSEs are telling this to us right now. These are their words, not mine, okay? In exact words. So what you want to do is ensure that you have great non-QM at your fingertips right now. Did you know that with Oak Tree Wholesale, they have a program that one, has far easier conditions to meet on your loans, and two, oftentimes have straight up better pricing right now. So price your second home and your multifamily loans with Oak Tree Wholesale before you lock and submit on a loan backed by Fannie and Freddie. You'll probably be doing your clients a real service here. Anyways, back to the story at hand. The memo from the FHFA goes on to say, and this is kind of just filler, the enterprises will continue to build capital under the continuing provisions of the PSPA. FHFA also continues to direct the enterprises to operate in a safe and sound manner consistent with their statutory mission and to foster resilient housing finance markets given prevailing housing market conditions, which include elevated demand relative to available inventory. And, oh, by the way, when they say safe and sound, that means more conditions and tighter guidelines. I'm just saying. Did you know that according to the National Association of Realtors, home equity went up 40% this last year? That's like Britney Spears crazy.
Leave Britney alone! Please!
Now, the average home gained $20,000 in equity since the first quarter. The average homeowner has $174,000 in equity, and 98% of homeowners in forbearance have at least 10% equity. Loan officers, think cash out refis. Seriously, this is the time to pick up your phone. These numbers are so good they almost seem unrealistic, yet they're true. And if you don't call, remember your competition will. So here's the thing. According to Redfin, this insanely hot market is actually beginning to cool a bit. A report from Redfin found that pending sales across 400 metro areas went up 6% year over year in the 4 weeks that ended September 5th. Still, the 69,563 homes that went into contract represent a 9% decrease from the high point set in May of 2021. And these decreases in pending sales is just one indicator of a softening in the competitiveness of the housing market. The number of homes with an accepted offer within 2 weeks on the market fell 9 percentage points from the 2021 peak set in March. And the share of homes sold above asking price dropped, get this, to 50.1% from 55% in early July of 2021, and this of course is according to Redfin. So let's say that this whole trend, this downward trend continues, and I hope it does. I hope the market goes straight up ice age on us here. It won't, but hey, you know, a girl can dream over here. Here's the reason why. A local lender, you know, a non-bank or broker lender, can handle a cooled off market. Great real estate agent can handle a cooled off market. You know who can't handle the ice age for a housing market? Bad lenders, bad realtors, and all these iBuying platforms. It'll put them to bed. It would spell doom for those in our industry that don't do good, or in the case of the iBuyers, intend our industry harm. It'd be nice to cool the herds a bit, don't you think? Hey, listen, these are 2 fantastic stories today. Make sure you share them on your timeline. Keep a conversation going. Because as a lender, when you start talking with real estate agents and asking them what they think about these things, you never know. A deal might just drop out of the sky for you. So make sure you share this. With that said, have a great day. Talk to you soon.